Happy Monday, Brent Tallman here with Fairway Independent Mortgage with the mortgage market update. Today is January 30th. Hard to believe it's the last Monday of January. 2023 is just flying along. With that being said, let's get right to it. Rates this week are slightly a little bit higher than they were last week. This is mainly due to some technical resistance and some leeriness on some of the investors because the Feds had their meeting and will make their announcement later this week. So conventional rates right now on average are 6.20. That's up from 0.05 from last week. FHA on average 5.77, that's up by 0.02 from last week, and VA 5.83, that's up by 0.03 from last week. And there's really no reason for it other than everybody's just a little bit leery. One of the good news of the things that have happened here is rates have been really steady, really on a little bit of a downward trajectory the last 3 or 4 weeks, which is really fantastic. We really need some stability in the market. And the reason being is we can get some stability in the market, we will begin to see premium pricing coming back into play, which is something that has been missing. Almost every loan we do nowadays has a point attached to it. Buyers are having to pay fees to get their rate. You can't get par rates hardly at all unless you want to pay some type of astronomical interest rate. And the reason being is investors are afraid that rates overall will start to come down and people are going to refinance and they need to make some of their money up front. And so they are making people pay cash for that. So hopefully as rates stabilize, we'll see some of that premium pricing return, and that overall will lower the closing cost for our buyers and our borrowers. With that being said, no big news last week really. The PCE number, which is really how the Fed's measure inflation, was as expected. So people had already priced all that stuff in. And as far as upcoming news, the Feds meet this week. They're expected to raise the Fed fund rate by 1/4 of a point. And so as long as that happens, the market will respond, I think, favorably. If they do anything outside of that, especially if they increase it higher than what's expected or announce a longer-term sustained interest rate, maybe above 4.75 or 5%, then that could trigger the market in the wrong direction. But as long as they do what they say or maybe announce, hey, we're going to start to curb this thing back, we actually could see rates improve later on this week. So we'll just have to see. The overall projection is rates will get lower here by the second quarter of this year. That is the projection. Of course, nothing's guaranteed, but that is the general consensus that rates will get better. We did get some good news as far as mortgage purchase apps had increased. Housing sales started to rebound a little bit. So all that is good news. So now is not the time to quit. If you're getting frustrated, getting nervous, worried about what the markets do, now is a better time more than even to get out there and prospect, to mind your database, to reach out to your friends, family, neighbors, people that you know, and keep them interested in the market. Because the fact of the matter is, rates are probably more likely going to come down. And so I hear it all the time, I'm just going to wait for rates to go down. The problem is, especially here in Florida, we still have a huge supply issue. There's still way more people looking for homes than there is supply for it. So if you think, hey, I'm going to wait for the rates to come down and then I'm going to jump in the market, you could have missed out, because you can actually buy a house now. I would say 80 to 90% of the deals I have working right now all have seller concessions to it, which was unheard of. You're getting repairs done. You're abiding by appraisals. These are all things that were not in the market a year ago, 9 months ago. And so now is a great time to buy. And I mean that with all sincerity, because if you wait, if your buyers wait, they could miss out, because as rates go lower, more and more people jump into the buyer pool. It becomes more and more crowded. More likely there will be multiple bids. More likely sellers won't give concessions. And we live in a very, very strong housing market here in Florida. So don't let the national media tell you otherwise. Okay, one of the things that's happening and why they're projecting rates is because A, inflation number is going to go down. B, we're in a recession. We've probably been in a recession, but you hear huge layoffs coming from Google and Microsoft and some of these tech companies, and that's going to continue. So they're expecting the unemployment rate to go up, and with that being said, rates will probably go down. Now, the Fed wants to get to a 2.3% inflation number. We're at a 6 something right now. So they got a long way to go, And so I always tell people now is the best time to buy, and we need leadership more than anything right now. So really encourage your buyers. Now is the best time to buy. You can actually buy a house. You can get seller concessions. You can get repairs done. These are all important things to buyers. So with that being said, we do have some growth and connection opportunities. Fanatical Prospecting will be starting February 13th. If you want to get some basic, lay a foundation for how to prospect and do that well, then this is the class for you. It's going to run 6 weeks. It's going to run the 13th, 20th, and 27th of February and of March as well. So please reach out to me, and I'll get you hooked up with the book, and would love to have you be part of the class. We're going to be doing another Realtor Happy Hour in Sanford on February 16th. I believe it's going to be at Celery City, but we'll make that announcement soon. And then if you want any help creating seminars or doing one-on-ones, I'm more than happy to help you out. So please reach out to me. Thank you. Take care. And remember, now is always the best time to buy.